Alrighty, welcome back to Weenie Trades. In this video, I'm going to be going over SPY, GME, GameStop. And then I'm going to be giving a quick trading recap. So it was a really awesome day today. SPY really gave everybody a chance. Gave the longs a chance and gave the shorts a chance. At the end of the day, though, we got clapped. If you were watching Weenie Trades live in the pre-market, I was saying, hey, the option chain is pricing in that we're going to be making a new all-time high. And how did I know that? Well, because the options on the call side were pretty pricey, and on the put side, a put credit spread was saying the 50% mark, the 50-50 credit spread, was right here at the 472. So that was a little bit of a hint towards the gravitation upward. Boom, nice good move up on the SPY. If you were also watching Weenie Trades live, people were asking me, hey, should I go long the SPY up here? I was like, yeah, probably not, because I just took profits on the SPY, and usually that means we might go up a little bit, but sell on off. And, you know, it was just all-time highs, but the expected move for the week was pretty much that. So if we're already hitting that, the edge of the expected move right on Monday, it favors a drop. And I know a Honda Moose caught some of this drop. I think he paid like 50 bucks and closed it out for 240. That was an awesome short trade. Just boom, drop, bear flag drop. And again, it's not so much the patterns. It's more so the psychology of the drop. Meaning, okay, are buyers trapped up there? Yes, they were. That's what the bear flag is. The bear flag is the buyers not getting a bounce that they needed. And the bear flag, boom, big breakdown underneath 472. Nice, good waterfall sell-off. And down here at Weenie Trades Live, I was saying, hey, SPY likely to revert back to that 472 as per the option chain was saying. What do? We touch 472 and boom, dump into the close. And I was actually swimming at this time, so boy, what a monstrous drop. So that's what SPY did. What's SPY going to do moving forward? Well, if we just quickly look at something like the hourly time frame, I'm drawing some of these zones. It looks like we might want to visit this bottom zone, and that corresponds with about SPY 464. Generally, whenever you close near the low of the day, usually signifies a gap down and maybe just a little bit lower. If not, if we're gapping up, now there's going to be resistance at SPY 469. So if SPY's at 469 and I'm starting to see a little bit of rejection, I got to practice some of my short selling skills and short the SPY. I didn't do any short trades today. It was actually a really good day trading day, despite not shorting anything. And boy, the market looks like it's headed to that 464. I'd be very surprised if SPY closed the week above 469, unless it's doing like some sort of holiday float. Even if it holds above 469, watch now for resistance at 471. So that is the SPY. Next up we got is GameStop. And GameStop, what a beast, up 8%. And if we just look at the daily time frame, I don't know, that looks like a bullish cup and handle. We got a high, low, lower high, higher low, lower high, higher low, lower high, higher low, bull break into a higher low. Can we get another bull break? Gosh, GameStop may be going for it. The shorts might be in trouble. And GameStop was just one of these stocks that I was kind of wrong on. What do I mean by that? Well, I was saying, hey, GameStop at about this 200 level, it's not a buy. And I'm sorry if you missed out on a few gains if you listened to me. I just thought, hey, the risk to reward was not to be buying GameStop up there, and that GameStop was more likely to sell off. You know, it's very interesting to see GameStop being green on the day while, you know, really strong companies, you know, like Nvidia, the Qs, Google, whatever it may be, Target, all these other stocks having red days, but GameStop's just beast moding. And it's because of the story behind GameStop. GameStop is more than just a stock. So GameStop had a really great day today. So now let's see if GameStop can hold above 245, the uptrend can continue. So moving forward on GameStop, again, me personally, I still think there's a lot of risk in buying GameStop shares up here. If you're willing to take the risk, great. As long as you know where your stop loss is, how much you're willing to lose, I'm cool with that. Take the trade, accept the risk, and go on forward. So the next area of resistance is going to be this breakdown candle high on GameStop. And that's about 287 to 290. If you find GameStop at 287 to 290, it's probably going to reject of some sort up there. I may even take a short trade up there at the 280 to 285 area. I'll have to reevaluate the price action at Weenie Trades Live, but GameStop's doing pretty well. We'll see if it can move higher. If GameStop's pulling back, as long as it holds that, I'll call it 228 on the daily time frame, then it should be good for the continued uptrend. you'll know GameStop's likely to roll over if we are coming underneath 200, and that's on a longer term time frame. So GameStop underneath 200, pretty bearish. The option chain was pricing in that GameStop was going to sell off. So now that it's pushing higher, I wonder if it's going to sell off from here or if the option chain has to readjust and say that GameStop might be pricing in a squeeze. Time will tell. We'll reevaluate this at Weenie Trades Live. Short term though, watch that 245 level. So that's the SPY and GME. Let's get quickly into the day trading recap. First up, I'm just going to talk about Nike real quick. Nike, talking about all-time highs, trying to call it out earlier in the day. And Nike over here, we move higher, pull back, boom, buy Nike over the breakout, 176. 20s, stop loss can go just underneath that 175.50. And then boom, just trailing up my stop, trailing up my stop. Take a little bit of profits through all-time highs, TP, because that's great liquidity. And we start to do an equilibrium. And I love these equilibriums because I can risk off of them. We got a high, low, lower high, higher low, bear break. So bear break, BB, I just took basically break even on those last shares. So Nike, a pretty good, just small little winner earlier in the day. But then we really started to get oversold. And once we started to get really oversold, we broke the low of the day, but start to form a hammer candle. Boom, I go long right there on Nike, 174.80s, and just trail at my stop, and then finally TPing at 176. So Nike, a great revenue trade. Nike moving forward, if we just look at the daily time frame, probably needs to go a little bit more sideways. Maybe sideways. And look at this drawing earlier from that new high. We bounce. Let's see if Nike can go sideways. I still have a slight bullish tilt on Nike. I did actually add this into the long-term portfolio about the lower 170s. So we'll see if I can add a little bit more. Even if we make a lower low, I still like it for the long term. But Nike, look for that to go sideways to slightly higher. What else do we have today? Let's talk about BBBY. This is an expense trade. And I actually think it was one of the better trades of the day, given it was an expense trade. So BBBY, I got an alert for a squeeze over 24.10. Why did I get that alert? Well, I set that alert because we made a nice good high. And if you recall the BBBY analysis a few weeks ago, I was saying BBBY probably likely to go sideways. This is what sideways looks like. Just kind of consolidation in that range. But today, if we made a high and then we pull on back and we're starting to eclipse that high, I want to get long on BBBY, at least for the potential squeeze. So what do? Go long BBBY, right on this little dip, call it 24.20. Stop loss was just underneath 24. Boom, quick wicked out. But guess what? I can get back in. Get right back in at 24.20. Same stop loss. We move on higher. Okay, same stop loss. So BBBY, actually an expense trade. But look how much money I saved myself. I saved myself 5% of my money just by having the nice tight stop loss up there rather than the loose stop loss. So giving it the chance to rally, but it didn't rally, so I stopped out. So BBBY, small little expense trade, minus $19. On all of my trades today, at any given point in time, I try to have about $20 to $30 risk. So I may not have as cool or as big of a P&L as some other traders might, but it's easier for me to fully accept the risk of the trade when it's something small like $30, and I can really let the trade go and develop. So next up we got over here is Amazon, and Amazon took the dip trade at about 35.80, stop loss right underneath that pivot, boom, stop quickly gets hit, and then it goes and hits the take profit. Whatever, that's tiny little scalping time frame. What I did do though was once we made a lower low on the day and didn't have any follow through, boom, re-enter Amazon, 35.77, boom. That trade was nice and money, take profits at the 3,600. And just before the pool, I unfortunately did have to take the break, basically break even on the last piece. So Amazon, despite even the stop out, a small little revenue trade, I was very happy with the way I managed it and the way it turned out. But anyways, Amazon did a nice good move up to 36.20, 1% on Amazon doesn't seem that cool, but I take a little bit heavier size on large caps. So 1% move, I'm always risking based off that stop order. So Amazon, nice good mean reversion dip trade. And the reason I was looking for Amazon long, by the way, in this area is based off the hourly time frame. So on the hourly time frame, I'm just going to draw this zone. You can see this whole zone over here. Look at this consolidation. Highs, lows, equal highs, equal lows, equal highs, equal lows. Boom, breakout, breakout. If you missed it on the way out, you can catch it on the way back in. And it's not always perfect. This is what a bounce looks like, catching it on the way back in. And that's what that trade basically was resembling on Amazon, based off the hourly demand zone. So that was Amazon. Let's quickly check out Target. Target was actually the best trade of the day. And Target over here, if you recall yesterday's video, I was like, shh, I'm taking the dip buy on Target at 242. 242. And why was I looking for the dip buy on Target at 242? It's just a healthy retracement. Look from the lows down here at about 225. Look from the highs up here at about 270. Well, that's about a healthy, 50% retracement, 242. And so you can see me trade Target at Weenie Trades Live. 241.21 was the low, and I'm getting filled for my shares, 241.80s. We make a nice, good move higher, and then we start to consolidate. And right here in the consolidation, I'm thinking, boy, are we going to break bull or are we going to break bear? At this point in time, it kind of looks like it's going to break bear, but I fully accepted the risk. And when you fully accept the risk, stop loss goes underneath the low of the day, and that stop loss eventually held. And Target, great move higher, and I'm coming out mostly at about 244, and the last piece at about 245. So great move, buying right here. Stop loss goes underneath the lows, and then peel profits, peel profits, peel profits. I like to scale out just because at the same time as I'm taking profits, it allows me to reduce my risk and stay in the trade for the longer move, especially if I'm going to be streaming for most of the day. Most of the time, if I'm not streaming, I just usually set those hard brackets, one in, one out. I do tend to trade better when I'm not streaming just because I'm not, doing all these jumbled orders. But also, I really enjoy streaming and helping people out, hanging out, whatever it may be. So Target, really good move up to 246 off of the daily chart retracement dip buy, and just going based off the alert. So that was an awesome little move. Quickly want to talk about Google. Google broke a rising wedge on the daily. This is a bearish move for Google. Bearish move. And, shout out to Freighter. He was talking about that short trade over there. And by the way, also Sample Stuff. If we just quickly check out the SPY, Sample Stuff was doing some bear call credit spreads, nailing the highs, probably doing some bull put credit spreads near the lows. We have some awesome SPY traders here at Weenie Trades Live, so be sure to hang out with us. But anyways, Google on the daily time frame was bearish. It started to break down, but at least earlier in the day on the intraday time frame, I see that we're zigzagging. We're oversold into support. There's not any real volume confirmation, but I like the risk to reward. Good risk to reward. That's all I really need for a trade. Is that the best trade? Probably not, but still, entering long Google 29.55, and then boom, peel profits, and then last out 29.70s. And that was right in front of resistance. So that's a healthy retracement bounce into resistance. What was the money trade was probably just buying Google puts right there and shorting Google down. Sometimes it's important to not have a bias so then you can really, really trade a stock freely. But sometimes I like to just pick these names and trade bullish setups on them, whether it be on the daily time frame or in the intraday time frame. So that was Google. Let's quickly talk about, while we're at it, let's talk about Netflix NFLX. And this is just a small risk type of dip trade. Coming back to it, yeah, probably shouldn't even taken the trade. But anyways, I like the Netflix long at about 657. So buying Netflix down here, 657. Stop loss goes right underneath the lows, 656. Got a small little partial, but oof. Stop loss just barely hit on the break even on the second half. So Netflix basically a break even trade. So it's always interesting to make that decision of whether to let the stock come and hit your stop loss for break even or accept the full risk and then let it go. Most of the time, I would say accepting the full risk plays out. However, there is something to be said about your risk adjusted returns really do go up when you put your stop loss to break even. It's a tough thing to say, meaning it's a tough thing to decide on because you either kind of have to always do it or never do it. Because if you use discretion and you're wrong, you're really going to skew your results. Meaning, if I'm going to go break even on the second half, I need to kind of always do that. Otherwise, if I use discretion on whether to go break even or not, sometimes it pays well, and sometimes it doesn't pay as much. Overall, it does pay for me to use a little bit of discretion, but it is a lot more work. So while it may make more money, it's a lot more work. I think most of the time, since I do trade for a living, I'm going to just go break even all the time on that second half because I like those riskless trades. It's all about whether you're on the offense or on the defense. And it all depends on how much cushion you may have. So if you have a lot of cushion, maybe it is easier to accept the full risk and let the trade go. Maybe if you don't have a cushion though, you have to protect your capital a little bit more until you can build that cushion to risk a little bit more. But anyways, each trade and setup has its own risk to rewards, its own parameters, its own setups. Day trading is always interesting. It was an awesome day today. Shout out to all the Weenie Trades subscribers and members hanging out, playing the SPY, doing well. You know, we're talking about, we have some really good analysis here at Weenie Trades Live. The hardest part is the psychology and the emotional part of trading and the money that comes with it, whether it be good or bad. But look at that NVIDIA bear flag. I was like, watch out, NVIDIA bear flag. And I was taking profits on NVIDIA at 330 the other day because, risk to reward. Was NVIDIA going to continue to go, or is it going to revert back to the expected move? You tell me. Thanks for listening to the trading recap, SPY analysis, and GME analysis. See you guys tomorrow for Low Volume Tuesday.